Did these nerd glasses make me look fat? Stick around this week. There's one of me later in the show. It does. Hey there, welcome to the show. My name's Les Solgrove. This is Simply Des Moines weekly market update. This show that we talk every week about what's going on in the Des Moines market and around central Iowa. And actually, this week is kind of a special week. 2 weeks ago, I was in Washington, D.C. at the National Association of REALTORS convention, and it was the legislative convention, but we always get the chance to sit down and listen to Dr. Lawrence Yun. And I've known Dr. Lawrence Yun for probably 13 or 14 years. And I've actually been on a couple of committees at NAR that also deal with research. So this is kind of where my love of stats comes. So without ado, let's jump right into this week's show and see what's happening in the real estate market. So first thing you're going to notice here is, and you probably saw this earlier this week if you're following me on social media, we actually surpassed the 5,000 closed sale milestone, and it's happened in the same amount of time that it took us to hit from 3,000 to 4,000, went from 4,000 to 5,000, both in 21 days. And coincidentally, it's also the same number of days that it took in 2021 that for this 5,000 milestone mark there. So kind of interesting there. Even though it was 21 days, it also happens to be 6 days earlier that it happened than 2021. So we're still enjoying that first 4 or 5 months of heavy market activity. And we talk about that occasionally, and we've talked about it last week, how we're starting to see a little bit of a slowdown. So the target date for us hitting 6,000, if we stay on track, is May 29th. So let's see if we can do that as well. So this week's dashboard, one thing you're going to notice here is on the left-hand side, the pie chart, look at how almost balanced existing homes are to new homes. You know, remember, it wasn't that long ago, we had about 52, 54% of our listing inventory was new home construction. And we're down to 43%. We're 813 homes currently on the market for new construction and 756. And, you know, it's just a matter of time before we kind of switch back over and we have more existing homes on the market than new homes. And that's going to be kind of a big deal because we haven't been there for such a long time. That's being reflected in the months of inventory. The bars in the middle of the chart, the two blue bars at the bottom, are both new construction indicators saying that we're in an even market that benefits both buyers and sellers. So you're probably, if you're looking for new homes out there, you're going to find probably enough that's going to satisfy your search and maybe find something you like out there in the new homes, where we're still pretty short in inventory on the existing home sales. Actually, we're down to, you know, less than about 2.5 weeks of inventory for existing home resale properties. So median sale price continues to rise. That's going to make a little bit of a change as we move forward too. But you know, here we go. The change is coming. So let me not be the first one to tell you that. But if you are hearing it out there from somebody else, it is true out there. One other milestone that we hit this week before we actually get into the show was we actually were above 1,900 homes for sale. On May 13th and 14th, we were at 1,900 and 1,902 on May 14th. And this little graphic you see kind of spinning through there, the red line in the middle at the top there shows you that we are quite a ways above our inventory levels. I would, quite a ways is a stretch, but we are, you know, 160 homes more on the market than we were at this same time last year. And if you kind of look down to the 756, where it's the blue bar down there, that's our existing home sales. So we're starting to see that category increase. We're also seeing new home sales below that kind of decrease. And it's not going to be uncommon as we move into the summer months that the new homes for sale kind of dip, and that's just because the inventory gets bought up as we go through the summer market. So that's why I say we're going to be in about a week or two. We'll probably be in a swapped position there where we'll have more existing homes on the market than we do new construction, and there's nothing wrong with that at all. So, all right. So at the top of the show, I said, mentioned that I was out at Washington, D.C. We were out to the legislative event, and I got to hear Dr. Lawrence Yun speak. I was front row and center because that's where all good nerds go to sit at these big events. And Dr. Yun and I go all the way back to, well, the first photo we have of each other together is 2010. And yeah, I packed on a few pounds back then, have gotten those off. But, Dr. Yun and I both share this love for market stats. So let's see what he said about the market stats for the National Association in the United States. And today we're going to kind of try to equate that to what it looks like here locally. So it's one thing to see the data nationally, but how it affects us locally is always kind of interesting. And this is kind of the way the show is going to go now today. One of the topics he talked about was the fact that cash deals are on the rise. And we talked about this a week or two ago about how we're seeing a rise in investors buying up the market. And some of these investors, in fact, I've even heard it this week that some investors are actually buying new construction and holding them as rentals because the rental market is so tight. And so if it makes sense financially, maybe that's where we're going to see the business go. But as far as cash sales nationally, they are on the rise. He reported that they were the highest segment since 2010 through 2012, which would have been about the time that the market had crashed from the last real estate and lender-induced recession. But we're not quite seeing the same thing here in this year for Des Moines. We are seeing kind of a rise, a little bit of a rise. Let me go back real quick. You can see from September 2020 on, or July of 2020 on, we've kind of seen this rise nationally. I looked at the same data, and I didn't put it in the bar chart form because it was a little harder to visualize. So I put it in the line here. But you can see that large dip that happened about a third of the way through, or just over a third of the way through of the year. That was right about the time that COVID hit, obviously, and we saw pretty much all sales kind of slow down for a period of about 6 weeks there. But this is the representation of cash purchases since 2019, early 2019. And you can see we're kind of making a little bit of a comeback. In fact, January and February were really pretty strong months here at the far end down there. You see that large jump there. And then in March, it kind of dropped and back up again to April. And so are we seeing the same kind of rise? I would say, again, sort of. We're seeing an increase, but it's all relative. We're probably going to see around, 15-16% at the most if we continue to rise in cash sales. The bulk of our transactions so far have been and continue to be conventional financing. So another topic that Dr. Yun spoke about at the NAR convention was how nationally inventory levels are at historic lows. And his report goes back to 2000. And I'm going to be able to bring it back to as far as from 2009 moving forward. So that's kind of what the little boxed in area there shows. But you can see that he reported from 2000 through about 2005, just prior to the the mortgage meltdown. We started seeing a lot of inventory when a lot of buyers were being approved for basically, if they had a pulse, they got a loan. That's the best way to put it. And of course, that demand drove inventory. So we started to see a pretty good rise of inventory through 2006 through 2009. And that stayed fairly steady until about 2012, at which point, we had that mortgage meltdown. And there's a lot of properties that went into foreclosure as well. And we see that in another graphic here, but the green line is kind of the median point there across the line. And it wasn't until about 2018 that we really started to see inventory start to drop. So you can see that even though COVID wasn't in the picture until 2020, we were actually on a downward trajectory. And this is kind of our natural cycle where we build inventory and then it drops and the buyer pool grows. And, just COVID just kind of put a twist into that. So What I did was I took the same information of Des Moines and looked at homes for sale by quarter from 2019 to present. Again, remember there's that boxed area there. That's kind of the same area that we're looking at. So you have this large influx at the far left, and then pretty much downward. And back in around 2010, we had our high listing count of about 5,800, almost 5,900 homes on the market at one point in time. And that, as you can see, even though we went through that market recession as well, and that's kind of that dip that we see there, we were on the comeback coming into 2019. In fact, early 2019, we were back above 4,000 listings again. Actually, it was late 2019. And we were poised in 2020 to, I think, really continue to grow and our inventory pick back up. And of course, the line there showing you where COVID-19 came into the picture and the subsequent slide downward. And our all-time low for this period is 1,681 homes. And we're, like I said, we're making a comeback because as of today, we're really close to getting back to 1,900 homes on the market there. So this is not yet a trend, but it certainly is a good sign that, things are going to kind of make a comeback, I hope. So another topic that Dr. Yoon spoke about was the home ownership rate and the median price. And we'll talk first about the median price here of in the Midwest at $273,800, meaning that the Midwest is by far the most affordable part of the country to live in. When you're obviously on the West Coast, you're paying over $500,000 just as the median price. The South is still a little bit higher, and that includes your states like Florida and Texas and Arizona and all those across the southern border. And then your Northeast section, which is predominantly New England and up the East Coast there at $397. So it's still pretty affordable to live here in Iowa and the Midwest. And in fact, the DMAAR's median home sold price of $271 falls right in line with that Midwest report that he said it was $273,800. So that's pretty darn good there. And along the left-hand side there, you'll see that the home ownership rate in the Midwest is right at 70%. The South is a little bit less than that, and this is kind of how this chart is sorted. Northeast, it's a little bit lower, and then the far West, it's just as the prices go up, it becomes a little more difficult to be able to afford to own a home. So in the Midwest, at 70%, that's a pretty decent number. And so I thought, well, I wonder how that compares to the Des Moines market. So I did some research off of the grid here. I went to the U.S. Census Bureau and I found the this is the blue line is the U.S. home ownership rate from 2019 to present. So if you remember, the Midwest was at 70%, and the overall rate as of right now, as of this past week, was 65% home ownership rate. So that takes into account the West Coast, East Coast, Northeast, and the Midwest here. And it's the median home ownership rate across the board, where you can kind of tell whether the rates or the ownership rate is going up or down, is just a little over 65%. And sure enough, right as we went through that mortgage recession, that's where our home ownership rate really dipped, and a lot of that was due to the foreclosure business that we did, and that lasted for about 3 or 4 years actually. So 2015 was when it kind of bottomed out that summer, and it was a tough year there, 2 or 3 years after that as well for all homeowners in the marketplace. However, home ownership rate and COVID-19 did a funny thing, and it really encouraged home ownership. And I think a lot of that was due obviously to the low mortgage interest rates, but also for the desire to move up to a little bit larger home if possible, as the pandemic was setting in and people were needing more space. So we saw a lot of people that were maybe renting in the center of towns and cities deciding to move out farther out, and this this moving out kind of increased the ability for home ownership rates to rise. And as I dug a little bit deeper, I went through Realtor Property Resource, the RPR, and I was able to find, at least for Polk and Dallas County, where the bulk of our sales are for the Des Moines Area Association, the home ownership rate, according to RPR, as of right now, as of May of 2022, is right at 72%. And no surprise, the farther you get away from the city center, home ownership rates are a little bit higher. So out in Dallas County, it's 76%. And so, again, these numbers were pulled from Realtor Property Resource, RPR, which is owned by the National Association. And so it's kind of interesting, kind of looking at how we compare nationally. Overall 65% home ownership, and yet we kind of beat that here in Des Moines and western suburbs for sure. It's 72 and 76%. So another topic that Dr. Yuen spoke about was the pending contracts falling. And, we've talked about that here as well, how we're starting to see that homes are not selling at quite the same pace, and therefore we're starting to see some of our pending sales go down just a little bit. Well, nationally, this is happening. They've actually started to see a trend from about September of 2021 through end of March, which is where their data ends. And if we compare that to Des Moines here, and I'll just overlay that last one here on the left-hand side at the top, you can kind of see that our business is still kind of traditional and cyclical, where our business picks up in the spring and goes down in the fall and picks up in the spring. And what we're seeing in 2022 is we're just not seeing that huge I should never even try to say that word, that huge rise into the spring market that we saw last year. So this is what's putting us behind this last year by close to 1,000 homes under contract right now. We're about 1,000 homes fewer under contract than we were at this same time last year. He went on to talk at length about new construction and how nationally the number of homes that are being built are at such a deficit that we desperately need new homes being built across the United States. And I will say that our marketplace has been pretty blessed in that respect, as you could tell from early on when I was saying we had more inventory on new homes than we had in existing homes. But you can see nationally that it's also seeing this dip from about September, October, November of 2021 to where the number of homes going under contract that are for new construction is dipping. And again, we'll do the same thing here. Let's bring that graphic up to the upper left-hand side there, and you can kind of see that we're nowhere close to where we were last year. Let me get rid of that graphic just so we can see the numbers on the left. We're around 800, maybe 900 and some homes under contract this year, where maybe last year we were, close to 1,100. And we're actually already on the downward slide here for 2022. So that's a lot of the reason why our new construction inventory is on a downward trend. So a couple of slides left, and it'll end it for the show this week. NAR does a lot of research and surveys, and they conducted the last survey about consumer expectations. This is from February of 2022. So this is before the spring market actually even kind of got up and going. They surveyed potential buyers and sellers of real estate across the United States, and they asked them, the question is, within the coming year, do you feel as though home prices are going to go up or down? And if so, by what percentage? And this 5.1 is what the consumers are kind of thinking, that home values are going to go up and down. It's 5.1%. Obviously what actually ends up happening is market driven. But the consumers are kind of thinking 5%, and that's probably a pretty decent number. That's kind of our traditional 3 to 4, maybe 5% increase in pricing. Over the next 5 years, annual average of about 2%. So they're expecting the market to kind of slow down a little bit. Instead of being 5 for the next 5 years, it's going to drop down on average to about 2%, which again would kind of fall in line with our predictions of a correcting market. Rent growth, as far as the cost of renting, is going to go up around 6.5%, and on average about 4.5% over the next 5 years. But you know what? The best news is when they're asking these questions, now they're not prompting them, but they're asking, do you feel as though buying is a good financial investment, and overwhelmingly 73.5% of the people responding are still saying yes, it's a good financial investment. Only about 6.5% are saying it's not, and the balance of those, which makes up the balance of the 100%, are basically saying we don't know. We're not sure what it's going to be. So the final slide here, Dr. Yoon always likes to show us our annual sales and price growth versus previous years, and he circled 2020 and 2021, saying that these 2 years are going to be somewhat of outliers of our market for the next several years, because this is the year that COVID kind of came into the marketplace and how it really affected the real estate market nationally. And you can see that on unit sales in 2020 and 2021, they were at 5.6 and 8.5% through 2021. And home prices have considerably gone up the last 2 years. And of course, if you have unit sales going up, then your dollar volume and pricing going up, you're going to see dollar volume actually go up as well. And so how does this compare to the Des Moines market? Well, unit sales in 2021, we were only up a little over 4.5% in actual unit sales compared to 8.5% nationally. So even though we had a good year last year, if you recall, we were struggling. I kept trying to will the market to hit 18,000 closed sales, and we just missed it just a little bit. But it was still a 4.5% unit sale increase. Home pricing, this actually outpaced the national market. I think a lot of this home price increase from our marketplace came directly from the fact that such a large percentage of our home sales were driven by new construction, and the pricing on new construction is probably a huge percentage in that 19.4% number there. Obviously, if we didn't hit unit sales like we did last year or the year before, that means then also our dollar volume dipped ever so slightly, and that's also what I reported. We were up about 17.6% versus 25% volume nationwide. So all that bodes good for Des Moines and Central Iowa. It means we're more conservative, we're more stable, we're not experiencing the highs and the lows and the swings that maybe one would see in other markets like that. So in any case, well, that's kind of the show this week. Appreciate your time, enjoying, if you like what you're seeing on this show, please do me a favor and hit the like button. If you have a comment or you want to ask a question, go ahead and leave it below in the comments, and I'll do my very best next week to answer those same questions. And in the meantime, I thank you again for joining me, and we'll talk to you all again next week.